Hey guys, Mike here with Rapid Quants. It's March 9th, 2022, and we've got movement, ladies and gentlemen. It's looking really good. We've got this really nice formation that's been unfolding over the last few weeks. Actually, it's almost 2 months now that we've been in this sideways pattern, and it's slowly coiling up. And the advantage clearly is with the bulls, which is, technically speaking, we've got these nice spike lows here on the bottom. See these huge spikes. Right, these doji formations, really long spike wicks that you see here on the bottom, which are evidence of price snapping back. There's definitely a big buyer down here. Well, not one buyer, it's just an expression, right? For institutional buying steps in here has slowly been accumulating, and that's exactly what we were seeing on the sentiment side. Also, when we look at the on-chain data that we constantly monitoring, we see whales just accumulating and accumulating through this entire phase, actually since around here, since around December, this first wipeout. Institutional players have been accumulating through all this, if you want to believe it. And now I think we're getting close to being able to reap the rewards of our patience, because I've been very clear with you guys. I have not been a bull tart at all since this, especially since the spike low here that we painted in December, right? Like I think it was December 21st. Yeah, the Christmas present, right? The Christmas present spike here, and after that, I was very clear about, like, we have to hold this, or if we drop it, we're going to see more pain. What did we get? When we did drop through, we got more pain. And since then, it has nicely, painted this beautiful formation here. And what used to be before, we had this, this support, used to be resistance, support, and that became, see if you kind of paint an imaginary line bit right here, and also where we kind of snap back here, that this now has become this kind of like the gravity center, if you will, right? The eye of the storm of this this sideways flag or triangle that's slowly forming. But clearly, it's trending up. I've extended the linear here, the linear regression, to 50 days to kind of span through the entire period here, because that's really what I'm more interested in, right? Because I mean, technically speaking, if I just put a 20 on there, we're still pointing down, but clearly, this is an uptrending sideways formation, and this is something where, okay, once this is done coiling up like it has here, it's gonna just release all this pressure. And given that the institutional players are still accumulating, the odds really are with the bulls. It's gonna resolve to the upside. That's the way I look at it right now. And what's really nice here is that we have now very clear inflection points. What do I mean by that? Well, look, if you're looking at these spike highs here, right? They're all in the same price cluster. Also line up very nicely with what we used to see, support and resistance. So loosely, okay. There's never really a fine line. I don't really like to draw lines per se, except for like entries and things like that. Just maybe if I want to show a trend. But when it comes to these kind of inflection points, you kind of have to like go with like a grayscale almost, right? But if you're looking at this whole range here, this is definitely where the bull separates from the bear, right? Very clearly. And this is where we're heading again. And clearly there will be a little bit of fight, but once we push above this, right? I think let's be generous. Let's call it like 45,000. Once we push back above 45,000, it's off to the races, guys. It's off to the races, because we're gonna it's just gonna pop higher, and it's gonna explode higher, because there's so much momentum has accumulated. And again, as I said, the whales are accumulating. The micro strategies of the world. Michael Saylor, Elon Musk, of course. Guys like that, guys with the pockets have been quietly accumulating. J.P. Morgan, even I think Bank of America has a crypto desk now, and analytical and strategy desk. I think it's called Bank of America Crypto Strategy. They've all been buying with both hands. And so we're going to see some movement here very, very soon. So if you're still on the fence, if you're still, thinking about crypto, well, you got to stop taking some action at some point, because this might be as good as it gets. Never any guarantees. Of course, my crystal ball is still in the shop. Until then, I have to rely on my price reading skills. And, after 20 years, over 20 years doing this, I've gotten pretty good at it. And, we're honestly, as bad as this might have felt, we're spoiled. I mean, look what we had to go through last time. This is a very small, contained formation, especially for crypto. I mean, look at this thing here, right? That was just a year ago. And, look at the mess we painted, and we had to sit through all this, and it was extremely frustrating. And then worse yet, unless you bought here, and I've been saying we're going higher back then already, right? And I think a lot of people really benefited from this ride higher because we made the right call last time. And so when this was much harder to read but until we actually got final confirmation was all the way up here. See that 42,000? What was that? Sorry about that. 41,000 approximately, right? And down here, the lows were around 30,000, right? So, I mean, we're talking about a $10,000 range here before we actually really kind of knew that the game is back on, right? The races, we're off to the races again. And this time, much more contained, much more cleaner pattern. Of course, a lot has changed too. Since 2020, the market has exploded. I mean, early 2020, the entire crypto market, in terms of capitalization, it was, I think, around $380 billion. Quickly grew to like over 500 billion. And then it reached on the peak, right, in late last year. I think we were at 3 trillion. I think now, even after correction, post-correction, it's still around $2 trillion in capitalization. Very different market. And if you compare that historically, right, if you're looking at, let's say, look at this here. This is just 2 years ago, right? I mean, almost exactly 2 years ago, because this was the COVID wipeout. And it kind of started bouncing back on March 13th of 2020. And I mean, look, this looks easy now, but trust me, nobody bought these lows. I didn't even buy these lows, right? And I'm pretty battle hardened, okay, compared with some people. And nobody bought these lows because this looks always so clean and easy on the chart. But trading through this, nobody wants to buy here because I know how traders think, and everyone is still soiling themselves at this point. And of course, over time the market has evolved. Let me go a little bit more in time. See how much more chaotic this looks. So we're here talking 2018, right? December. And I mean, the entire crypto capitalization was probably around 100 billion or maybe 150 billion. Let's be generous. Back then, it's a fraction of the market, completely different market. And we've become a lot more efficient since then. People say, all the institutions are getting into the game now and they're ruining the market. No, they're not really. They're actually providing a lot more liquidity and a backstop. And they don't want to see the crypto assets get wiped out, either. So, and if you wish you would have traded like 10 years ago or 5 years ago, even, think about that. I mean, if I go, I don't know what is this not backfilling. We're only going to 2017. Sorry. Let me go to Bitcoin USD. Bitcoin USD. Okay. So again, a little bit more historical context here. And so if I go all the way back here, now these things, I mean, trust me, guys, these were nasty, I mean, some of these formations here, look at this here. I mean, how would you have traded through all this? And that's a very thin market, back in 2018. And, here, look at all this. How would you have felt trading through this? So we're spoiled today. We're spoiled. I mean, if you were a hodler back then, imagine hodling from all the way up here, all the way through down here, and then riding it back up all again. How would you have done that? That's the question, right? And that's why we're trying to help. That's what we do here. That's why when we look at this, like, guys, this is nothing, man. This is like a picnic, right? In comparison with what crypto trader have been through collectively over the last few years. So this is nothing. Much more context today, a much more clean, efficient, much more predictable market. As far as crypto can be predictable. It's still a volatile beast. Let's not kid ourselves, right? Other good signs. So one thing I find really fascinating, if you're looking at, for instance, Ethereum versus Bitcoin, right? And normally that's kind of our measure, or let me move my mug here, up there. So look at that. It's kind of trending a little bit down, but in general, it's been just sideways, right? Ethereum hasn't really been doing much. And I don't know. It's kind of interesting because generally, we don't see really altcoins pop up their heads, before Ethereum gets out of the gate. And with the altcoin mastermind that we're holding, which is a separate service they're offering, we've been actually quite active for the last, given the market phase, especially quite active over the last few weeks, because we've grabbed some really nice ones. Here's Luna that we grabbed here. We had to sit through a little bit pain, but we're in the clear and it bounced right exactly where we entered way back. And it's off to the races now. So it's looking good. I'm liking it very much. It is a good space, by the way. This whole Luna, Mir, ANC, this whole trifecta. it's a good place to be in. Let's go and pop up ANC USDT. Yeah, this one was a beauty. This one we grabbed down here. It was really nice. We grabbed it on I think it was let me look at my sheet here. I have the sheet behind. ANC we grabbed on the 10th. So yeah, right down here, right? 10th of February. So, I mean, what a ride, right? That was really, really beautiful. That was really, really nice. So, and of course it's coming back down a little bit of profit taking, but it's always stabilizing. Nothing is going to just keep riding higher. What else we got? Mayor. We grabbed that actually just a few days ago. But we nailed it right here. We grabbed it right here, and it's already taken off. So, very happy. We also got another one holding that's kind of been a little bit more contained, but we grabbed it actually here. We had to sit through a little bit of pain here, but it's holding strong, and I think it's in a similar type of there's a lot of staking going on now, and if you remember. I don't know how long you guys go back, depends on how old. I've been trading forever, it feels like. And I definitely remember the 2000 crash in equities, and the 2008, of course, right? The real estate bubble when it burst. But when I look at the high flying stocks, back in 2000, like Excite, AOL, even Yahoo, those weren't the stocks that were really exciting in 2007, before things really fell apart, right? And so now we have the same situation, of course, now happening with crypto, where we have these regime changes all the time, but they're happening in much more compressed time frames, right? They're not happening every 10 years or so. It's not like, okay, well, 8 years, 10 years, whatever, they don't happen like 2000 and 2008. And then, now we're probably, going down again the way it looks like. But we had this long bull market that went for like 14 years. And I mean, in crypto, everything happens much more in much more compressed space. It's like a time and space, and things are really taking off so rapidly. And also the regime changes happen much more quickly, right? And whereas, we've got a whole new group of coins that are coming in, especially in the staking arena. This is a new hot space, and that's one we're monitoring very, very closely, especially with the mastermind. We meet once a week on Sundays, and we go through like exhaustive market research. We pop open the hood, and kick the tires, and we'll look at everything. We'll do a lot of market analysis, look at sentiment indicators, on-chain evidence, what we're seeing, wealth accumulation, NUPL, and all this kind of stuff, MVRV, all these on-chain crypto measures, which tell us a lot about the state of the market. Sentiment measures, implied volatility is coming in now because a lot more trading going on. In terms of derivatives, it's really, really starting to grow, and that alone, for me as an option trader, it's going to be very exciting because it's giving me so much more insight in terms of the market, like expected move and things, and also in terms of implied volatility, giving me much more deeper insights into what the market is thinking and how to take advantage, of course. And eventually the next step will be that we're going and starting to trade in derivatives, particularly options, right, on crypto. So that's coming in the near future. But for now, we're still, with the underlying, right now we're still trading the coins directly because there's so much opportunity, especially here with in the altcoin space. And if there's a few coins which are really rearing their head, which is exactly with Cryptonaissance what we're looking at when it comes to altcoin season. Which ones are the high flyers early on in the space? That's something that's really like a mechanism and like a technique used in a lot of fund trading. A lot of fund traders are using that technique, looking at early breakouts like 30, 45 days back, and those are usually the candidates which really make good. For basket trading, make good candidates to kind of ride higher once the entire sector starts popping higher. So we're really seeing a few starting to spearhead, and that's a very, very good sign, especially along with what we're seeing here in Bitcoin USD. Let me go in there real quick. Let's finish up here. Bitcoin USD. There you go. So yeah, I mean, for looking at this, very positive. Seems to be holding strong. And again, if it can, let me move myself again. By the way, in case you wonder where these lines come from, I painted them actually on February 7th. And I said, okay, we're probably going to see something like this. And this is always like a projection. I knew we're going to get a little bit of retest, and we got almost exactly a retest that I didn't mention, but we dropped lower. And of course, we're taking more time here. That's something, and I made that clear from the beginning, by the way. I didn't expect this to play out the way it should play out. But, that I want to play out. Would it be nice, right? But, the easy way, right? Like, bum, bum, bum. I wish it was always that easy, but it's not. Trust me, guys. So, but it's doing its thing. It's coiling up, and that's actually very much valuable. And let me kind of finish my presentation with that, because this is valuable in terms of just understanding of how markets kind of really operate, right? This is, of course, what we always hope for, but if we're getting this, although it's more painful. Remember the expression, no pain, no gain. Same in trading, because what this does here, it paints a lot of context, and this context later on the line will become very valuable, because if we pop up, let's say we pop up, right, and we bounce, and then we drop back down, because a lot of times here at 50,000, psychologically very important, right, and then it gets dropped down again. It has all this context here as an excuse, right, and we have it here too, and we have some here as well, yeah, and all this technical context will come very handy if we have a retest, or even further down the line, if we pop up higher again and maybe we get slammed down. Hope not, but if the proverbial S hits the fan, right, we have context here. Whereas last time, right, when we popped up here, we only had this here, right, and we got lucky actually. We didn't even go all the way to down here. So in comparison with what we've been through, this actually has been quite contained. So that's that. So it's looking good. And if you're still interested in joining now, or even just if you're not interested in joining, fine, that's great. But if you're thinking about accumulating Bitcoin, either way, just in your wallet, fine. Might not be a bad time to do that, because the psychology changes very quickly. Right now it's still fear, and I understand where you guys come from. I've been there many times. And you never really lose that, the fear part. When we're down here, it's like, my rectum goes like this too. But but in the end, I see the sign. I always myself as a measure, right, as a contrarian measure many times. And when I see this here, right, but right now it's still the thing. Oh, it's going to break. Are we still in a bearish mode? Are we still going to be correcting? And as soon as this breaks out and we're popping to here, the psychology completely changes. The entire, participant, everyone in the market then goes and switches into FOMO mode. It's like, oh, damn it, I wish that accumulated down here. I wish they would have bought down here. Like I've been telling you guys. How often now? So, I like to be a wise ass. Sorry. I know it's easier said than done, isn't it? It is. It's easier right by here. I did, but it takes some overcoming. When it comes to trading, quite honestly, it's all about psychology. It's all about psychology, because you're always in your own way. That's really what it comes down. Because in hindsight, when you look at these things, right, they look so obvious, right? And later on the line, they're like, oh yeah, sure, it was a great buying opportunity. You can, show off at parties and say, oh, we're gonna buy it down here. But, very few do, right? Very few do, because it's just psychologically very hard to get yourself to make the move here, because it looks so ugly, right? look at this, just a sea of red, right? Look how choppy this mess looks. Who would expect this? But this is exactly what the market does. The market always is out to hurt the most participant, and because most participants follow their intuition, and it's your intuition that gets you into the dumpster, right? It's intuition that gets you in the end, because intuition always screams at you, like the fear part, and demon sitting here on your shoulder. So. Anyway, what's wrong with your mic, right? So again, wrapping up. Okay, I've kept you guys on long enough here. Dumbing it down for everyone. Inflection points, 45,000. It has to breach that. When it does that, hopefully soon, we're off to the races. Okay, and then everyone's gonna switch into FOMO mode. We need to, of course, hold this. We have some space now. It would be very good, very positive to hold 37,000. We're not in trouble until we breach through that. Once we do, we have a grace period until around here, 34,000 and change. This it needs to hold. If it breaches through that, then this whole thing becomes a bearish formation. right? It becomes like a double top, and we would then probably slide lower. But at this point, the odds of that are fairly low at this point. I'd give it 30%. I think a 70% is some kind of bullish formation that it completes that. Because again, as I said, and just like it was here, even though this was pointing down, even here, the advantage seemed to have been with the bulls the entire time. We got this last scare out. We didn't even get this one. Maybe we get one. It's possible we're getting the scare out, but you can never, remember, you never know. We might just get something more like akin to this, not as clean, but boom, might just take off. So you never know. So these are the inflection points. Make note of it. Keep an eye on this, and if you're interested in participating, if you want to join us, with Cryptonaissance, you know where to find me. Same with the altcoin mastermind. We've been very busy, and looks like we're going to be much more busier very, very soon. So it's a great time to get active again, and to keep an eye on this market, because this market is about to go bonkers. That's the way I look at it. Okay, hopefully to the upside. So that's it. This is me, Michael Merle, signing off for Ripple Quants, and talk to you soon.